Okay. Can everyone hear me okay? Fantastic. I've been so looking forward to this day since it was announced, as I just had a look at all the caliber of speakers that were going to be on today and the various topics that were going to be covered. And it has really lived up to my expectations. There's been so many interesting discussions. And I think the emphasis on just how far technology has changed. And I think we're really at the business end of that kind of application piece. And that's what we're going to kind of delve into today, is some of that application of real-world assets. So I won't speak for too long because we have such an amazing caliber of panelists. But I would like to please ask Michael just a very broad question just to get us started. And that is, why tokenize? Could you please also introduce yourself as well, just as at the beginning of that question there? Thank you.
Certainly. Thanks, Rachel. Hey, everyone. So Michael Cotton, founder of Meld Gold. We tokenize precious metals, in particular gold, but also silver, with the ability to also tokenize other physical assets. So specializing particularly in small scale, high value physical assets. Why tokenize? This is probably the big question, right? So I think for us, the way we always like to summarize it is there's two key reasons to tokenize, which is access and utility. So for us, we see the technology as bringing those two elements to the forefront and delivering them with the most efficiency possible. So how do we allow seamless access in a broader fashion and in a scalable fashion? And then once those assets are digitized, how do we allow more utility? And really, this is where blockchain has solved that problem the best. And, we try to take a little bit of a agnostic technology approach, which is what are the actual elements we want to achieve, what are the actual criteria of what we want from the technology, and then what technology best fits that. And in reality, this is where blockchain really comes to the forefront, being able to tokenize assets, bring them on chain, and then being able to create utility. So for us, with things like gold, it's the ability to prove ownership through blockchain technology. So being able to say, I have complete ownership, I am the owner. There is no incumbents on this asset, and then being able to get a loan with that easy to prove, verifiable way of having certainty around the asset, and then being able to take a loan peer-to-peer or otherwise in seconds. So that's, for example, a really great utility use case we see for gold. And then also access, for most investors globally, access to gold and access in a way that feels trustless and secure and safe requires a certain level of value as a minimum viable transaction to be efficient. So for example, if you buy 1 gram of gold in bar form, the premium on actually fabricating that gold, all of the roadblocks and all of the hassles around getting a physical gram of gold are quite significant. So even in Australia, it's about a 30% premium on a 1 gram gold bar, whereas you could buy 1 gram or a tenth of a gram on chain for cents. And so that's really where you democratize that access piece, where anyone in the world could get access to an asset at the same rate and trading rate as anyone else on the planet.
Great answer. I think we're talking a lot about efficiency. So to get a number on that, around 30% premium, was quite impressive. Fairly daunting spread there. Karthick, thank you so much, Michael. Karthick, could you please introduce yourself as well, and could you please speak to us again some of that more broad opportunity and where DLT technology can kind of play a significant role?
Yeah, sure. Thanks, Rachael, and hello everyone. Karthik here. I lead Block Majority. I'm a co-founder at Block Majority. We are an independent blockchain engineering and consulting shop. We work with businesses of all sizes to help them adopt blockchain solutions. It could be a TradFi business or a Web3 startup. We work with a variety of clients. We work largely in the financial services space, and so I probably address questions more around the areas where we work in, around financial services. So I think, in terms of the broad opportunity, and this question comes up, a lot of times, and we talk to a lot of people, TradFi or business people, even friends. They're like, "Why are you in blockchain? And what is tokenization going to achieve? I can buy everything today. There is money, digital money is already there. There's already stocks I can buy." But I think if you think of it, broadly, like that's a very limiting view. If you really look at under the hood, what's happening. I think Michael talked about it a little bit around access and so on. But really, like one of the major things that we could see happen in financial services or financial markets is the creation of a long tail financial market that currently does not exist today. And the idea of a long tail market is you're able to offer millions of products to customers, to niche customers anywhere in a very seamless, in a very cost efficient way. And I think you can take a reference from internet, right? And what internet did with its basic properties of, broad economies of scale and information discoveries, that it allowed efficient marketplaces to exist. And we could see the likes of Amazon. And if you look at Amazon, it probably offers 350 million products to 310 million customers. That's more products than customers. And you could see that in Google AdWords, where businesses of all sizes are able to advertise to their niche customers. And this kind of marketplace where you are able to offer millions of products to a customer doesn't exist in financial services markets, because the market technology isn't present for a lot of these securities. And to think of it, okay, you have stocks and you look at US stocks, for instance, and the concentration is usually in the highly liquid stocks, the blue chips, the Mag 7, and so on. But if you look at the overall picture, the public asset space that is available for investment, like the US listed stocks from the mid 90s, have gone down from around 8,000 listed companies to only 4,000 companies, or less than 4,000 companies today. So you think of all the, like brain power of the world trying to, invest in the best asset class and targeting just 4,000 assets today. And that's a very limited marketplace to operate in. And you're also like fighting against the bots. So where does this average investor go, right? So, and with DLT, the blockchain DLT, or, a combination of these technologies with asset tokenization, we are going to be able to bring liquidity to largely liquid assets in the private wealth space. And that's not just limited to venture capital or, venture capital funds or PE funds. That is something that is happening today. But you're going to see possibly the creation of multi-sided platforms, like where a buyer and seller coexist. Or you think of Facebook Marketplace as an extension to, say, Amazon, where you can go to a marketplace, you can be a buyer and seller at the same time. And you see some of that happening with the decentralized exchanges, where you can be a buyer and seller at the same time, right? So these multi-sided platforms are going to emerge. And I think today, something like what Securitized does with the fund tokenization is probably like what Amazon did with selling books in the Web 1.0 version. And we're going to see more of, Uniswap-like experiences instead of, a stock market-like experience where, you could have multi-sided platforms. And that's the big opportunity, I think, bringing liquidity to liquid assets, creating a frictionless marketplace for people to trade a variety of assets and asset classes. And I think that's the broad opportunity spectrum I think we are working towards. Yeah.
That's very interesting, especially talking to some of that, just the reduction in kind of investment opportunities down to those around 4,000 companies and things like that. When I was working in investments a few years ago, it was very much a question of where can you put your money? There's so much competition for it. So seeking those avenues is quite competitive. And it was also interesting. I remember reading about how commodities as a being incorporated into your investment portfolio is also relatively modern. Only 20 years or so in the making. So I think that speaks to the nature of what you're talking to, that you see improvements in technology and things might change rather quickly as you start to apply it. Thank you so much. And Julia, can we go down into some of that detail again, talking about the real estate tokenization? Could you please also introduce yourself as well? And I would like you to please relate your answer to the investment landscape in Australia as well, please. Thank you so much.
Yeah, so Julia Buchholz, I'm CMO at Blocksquare. Blocksquare is a global real estate tokenization infrastructure provider. We have tokenized in over 24 countries now. We are based in Slovenia, like our headquarters in Slovenia, but some of our team, myself, we are in Australia, especially Perth. We developed a legal framework that is a bit different than most other tokenization providers in the real estate space are operating. We started Blocksquare in 2017, basically doing nothing else ever since then, focusing on real estate and how we can solve the issue of liquidity mainly and accessibility, of course. When we think about tokenization, often we only think about investment and how to raise funds. That's why people, most of the people, first of all, think about it. But what really, and I'm a big advocate for this, where really the opportunity in blockchain lies, is Web3 communities. And these Web3 communities are also existing in local markets. And if we can use Web3 and tokenization and blockchain to access communities who can come together as individuals and fill the funding gaps that are currently causing problems in real estate funding in Australia as well, with the housing crisis and everything we have going on here. I think this can be a very powerful tool, and really something that needs to be really seriously considered to solve problems in the Australian real estate market. I believe so. Globally, as I said, we tokenized with our tokenization framework in 24 countries already. And we have marketplace operators using our white label real estate tokenization solutions by, I think it's 19 marketplace operators worldwide. So basically, by what a real estate tokenization infrastructure does is we created a layer on Ethereum that has been designed to fulfill all the needs you need to, if you would like to run a fractionalized, tokenized real estate offerings in a marketplace form. And this software as a service solutions basically can be easily licensed from Blocksquare, and we can get a marketplace operator running within a few weeks instead of a year and $1 million funding later. They can basically just grow on our software as a service packages, if you see like that.
Thank you. Can you speak a bit to some of the challenges and opportunities?
Yes, well, I mean, look, I think 80% of the global investment in funding for investment properties is distributed in 60 cities in the world, which means there are thousands of markets in the world that are basically left behind, and they cannot develop the infrastructure that they deserve or need to grow. And this is where the tokenization, in my opinion, comes in, to focus on the markets that the hedge funds do not cover, that the big investment banks do not cover, and so on and so on. So this is where the community can really create change. This markets, normally what's happening is the reason why investors do not potentially invest in these markets is because they always want leaders. They look like, what are the other guys doing? And this is where we are putting the money in. So what if the community liquidity becomes so strong in these markets that actually the community goes behind these fundings? And that is definitely an option to consider. And this is how we based our entire infrastructure and design of the tokenomics. So at Blocksquare, we are tokenizing the economic rights of properties, so they can be traded faster and more liquid than traditional investment vehicles. And this enables us as well that we were able to connect our legally binding tokens with the land registries in Europe, for example, because it just fits in the laws very well there with MiCA and other laws basically in these markets. So all tokens, economic right tokens, are connected to the land registries, but because they're economic right tokens, we can still trade them on the secondary markets at the same time and create the liquidity that's needed for Web3 investors, because Web3 investors they want liquidity. That's, we have to adjust for both markets. So that is something that has been achieved very lately, and it's a world first to create this security and safety in RWA, because there is some issues with double spending problems as well. What about if a property has been tokenized already through a different way? You cannot see that on the land registration at the moment. So the only way to protect the double spending problem and not having any surprises later on is basically to make tokenization transparent in the land registration of a property, so people can look it up and see it in Australia, maybe as a form of a caveat or whatsoever. But yeah, that's very, very important in RWA, and it is something that hasn't been pointed out often enough as an investor risk, I believe. But it is something that has been solved now as well already in other countries, and I hope we can bring it to Australia as well.
It's very interesting. It harkens me back to development economics days at uni, and just talking about how some of that fundamental property rights and the impact it can have on a society and investment opportunity, right down from a societal level into individuals' rights and autonomy into the economy as well. It's a very large piece of every single economy in the world. So very interesting. Thank you so much. Karthick, could I please get you to speak more about these solutions to support real-world assets? And can I ask you to detail some steps which you think can be taken to support this growth?
Absolutely, right. So I think in terms of, real-world assets, again, when I talk of financial assets, they live as real-world assets today on financial systems and so on. So I think the thing is we've got to be able to bring them on chain. And to support this, there are a few things you have to do first. We work with a number of, institutions, banks, global banks, or, non-banking financial service providers. And I think the problems are same, right? So a couple of solutions you need to address are internal. Some of this is external to you. There's obviously, things around rules and compliance and so on. But even excluding that, there are a few things. Firstly, if you look at how you kind of sort of build the technology, I think in many ways technology itself is not a problem. It's widely spoken of and acknowledged, but you have to really experiment the technology to be able to understand whether it solves the problem for you. There's a lot of theory. And you learn some things in practice. And I think I always have the sense that marketing is ahead of technology. Technology is ahead of implementation. And implementation is always ahead of the regulation and rules and so on. So, right. So if you follow the marketing, you'd be you'd struggle with the implementation. So I think the first thing is you have to burn your fingers, right? So just get going. That's one thing. And secondly, how do you actually build it? If you build it within a system which is highly regulated, even getting access for developers across systems, it just takes weeks for someone to write code, right? So it's not an ideal sense. So you've got to be able to experiment differently. You've got to put an external sandbox and be comfortable with it. Otherwise, your firewall guys will not even let you connect to a test net, and they'll say, "Oh, this is external now. We don't want to connect to the decentralized world from our test environment." So you run into all such problems. So having a sandbox approach where you can collectively learn, experiment, fail, and succeed, I think that's a very important step. So these two things are fundamental for projects to succeed. And you got to work through your bureaucracy around it. So that's one. The second thing is now in terms of external, right? How do you what are the dependencies you have? Obviously, we see the industry is moving forward. There's a lot of projects that are happening. But in the traditional finance space, you can also see that it is happening in a siloed way. There are a lot of pilots and experiments that are happening internally, and then there are islands of change that are being built. So how are we going to actually bring a sort of collaboration to this? So effectively, we need an interoperability framework, right? A sort of an approved interoperability framework that is established sooner than later. Otherwise, we'll end up creating these multiple chains, and they're going to be same as the banking, private infrastructures, where money is stuck and not liberated. And it's going to be the same story. You're going to have multiple coins, private coins, tokenized deposits that don't talk to each other. And that leads to the question of liquidity. And Julia talked about it, right? So liquidity is fundamental. It's the lifeblood for any use case. We could solve the settlement problem. We could say we went from T+2 to T+0 or instantaneous settlement. But what if we didn't have liquidity, right? You have these multiple chains, there is no liquidity. How is settlement going to happen? So maybe it is important to address the liquidity problem first, right? And think of how is our money going to be fungible across multiple chains. And I think that's probably the first problem to solve. And then the solutions around tokenization and the right product set would come. And finally, around change management. If we wait for mass market participation to happen by everyone learning this technology, understanding the risk, it's never going to happen. You've got to be able to build solutions that are API centric, that sort of integrate with existing APIs. You've got to be able to work with, the Swift messaging layer. Like Swift has already solved the problem of messaging with ISO, the ISO program. And that program, if you go back, the roots were in 1970s. So it's a very long thought process, and you want to kind of build on top. So those are things you've got to do. And finally, like reachability is important, right? Reachability is also lifeblood. So you got to be able to collaborate across multiple chains, multiple APIs, and adoption. Work with a customer instead of just building the perfect software. So I think those are things that we have to take. So the solutions are varied. Some of those technology change management approaches, but I think multiple things that will have to come together. And that's how successful projects are getting done as we see it.
Very interesting. I sadly have to agree with you on that change management one. the amount of solutions that are already out there, but trying to get uptake on it or to communicate to people, I think that's a big problem in academia. Even you have all the solutions, but trying to get them implemented. And I was laughing because I was like, I won't get you to comment on the particular chains that you think should be consolidated. But very, very strong answer. Thank you so much. Michael, if we can think that all of these problems that we've just talked about have been solved, what then does mass adoption look like? And how would the world interact with real-world assets on a global scale? Just a small question.
Yeah, cool. All right, I'll try and keep it short. I'm conscious of not rambling, but I think the nice part is both Julia and Karthick touched.
We've just got a bit of time as well, so please go.
No worries. Both Karthick and Julia, I think, touched on a lot of good points that are all a part of the answer to this question. But I think if we sort of go to what the base case is, in reality, people need to find value, right? They need to see value in whatever they're transacting in. So I think we're sort of past the point with the technology of it's a good idea. And we're now at the point with this next layer of adoption. It needs to come value and needs to come usefulness, for lack of a better word. What flows on from that is access, and what flows on from that is utility. So there's no point in it bringing value and bringing utility to users if they can't access it, which I think to your point, Karthick, is if we digitize it, but it stays in a walled garden that still is only accessible by 1%, it actually hasn't achieved the goal we want to achieve. And then I think we sort of arrive at, okay, if a user finds value and they go, this is actually really interesting to me. I want access to gold. I want access to property. I want access to investing in a company I couldn't before. And I can do that through this technology. Brilliant. I think then the next piece is how they actually get access. And wallet infrastructure, I think, is a big problem that we're seeing a lot of innovation around at the moment. But I think in reality, when you have someone who currently uses the current version of most decentralized wallet infrastructure, that idea of taking complete sovereign ownership of the asset or of your wealth, or however you want to word that, is actually quite daunting. And I think people underestimate often how daunting a task that is. So I think, that's one of the big things we'll need solved in this coming next period, which we'll certainly see some great innovation there. But how do you give people the comfort in feeling secure while having access and self-sovereignty, and that's a big problem. So I think in terms of what it will look like and what the end solution looks like is an easy to use, seamless version of actually getting access into this marketplace. And then finding utility that's hard to find elsewhere. And I think collectively we all know on this call that the technology delivers value. It's just a matter of getting it in front of the right people, giving them access and formatting it in a way that they're comfortable with. So that's sort of our next big challenge. And I could rant about this for another 20 minutes, but that's sort of my succinct version.
I love that answer. It always comes back to the UI almost, doesn't it? So if you get that nailed, then people are happy and they almost don't need to understand the technology if they get the utility. So I think that that's not a future too far away either. We kind of touched upon earlier, I think, Tom, when you talked about some of that developments in product over the past 5 years. So fairly excited for the 5 years ahead. But yes.
And I think, Rachael, a good example is I think you ask anyone on the street, they don't know how the internet works, right? Because it's not actually relevant to them. What's relevant to them is they find value there, and whatever that looks like to them as an individual. And they've got easy access, and that access has only become easier. So I think we're at the start of that curve for this technology.
Couldn't agree more. My favorite example is a car, because I've got no idea. I always just hope it's going to work.
Me neither.
Julia, can I link your real estate tokenization, please, into DeFi? I think it's kind of a bit of what me and Michael were just touching upon and discussing, is that kind of accessibility and interchangeability within the ecosystem. So could you please touch on that for us? Thank you.
Yeah, sure. I think when we talk about real estate, first, what we normally do is almost like direct real estate tokenization is almost more, yes, it's Web3, but it's not really DeFi yet. I mean, most of the platforms out there even hold the escrow for you and so on. What we do at Blocksquare is all transaction of the real estate is directly peer-to-peer. So you purchase the marketplace brings together the buyers and the owners, and the direction goes straight into each other's wallets. So they're all like are basically in charge of their own wallets, but we have specific designed security layers on the infrastructure for the token, the property tokens itself, for the property token holders. Now, that was that basically peer-to-peer was very important for us to take that middleman function basically out of the market. But then we took it to the next step, and that was actually what we were talking about. We needed a liquidity engine basically that can act for all our marketplace operators on the infrastructures and basically all properties they're getting onboarded on the infrastructure. And the biggest goal would be, of course, the instant swap of, let's say, you tokenize your property and you go to a platform and you can just submit it for tokenization. You're getting the tokens into your wallet, and then you can just simply swap them into a stablecoin, for example. And that liquidity comes somehow from the community or from DeFi lending protocols or something in the market. Now, for the last 3 years, we have been developing something called Ocean Point. It is a DAO and a DeFi for real estate platform. And when we started to launch Ocean Point, what I just mentioned was exactly our vision. But this is something that doesn't happen overnight. So over the last 3 years, we focused on that real estate tokenization part, and we needed to find that security through the land registration and all of that to make all what's happening at the back end, basically, of Ocean Point as the liquidity platform had to be really safe and secure for the token holder and, of course, for the liquidity providers, for example, lending protocols and so on, who would like to accept collateral as collateral in form of real estate backed tokens to give actually stablecoins out, right? As an example. So I mentioned earlier the latest achievement of our Luxembourg framework, which basically enables us to put every tokenization with a charge on the land registry. So now we achieved that in Europe. So now we can basically start very soon to launch actually the first real estate backed aggregated token. We call it a flat coin. And that will be backed by a real estate portfolio in the back. And it is part of our Ocean Point DeFi protocol, oceanpoint.fi. So real estate owners basically will have that functionality of the instant liquidity swap very soon, hopefully in the future. We're starting to launch this coin in the next few weeks. We're just getting the last smart contracts audits done for our pools and so on. And then we're going to be ready to basically launch that and open the liquidity pools for that. So, but if this all goes how we have been working towards and what we're imagining and the market is adopting it, then we really basically fulfilled a dream in real estate, and that is instant liquidity for real estate access. Who, they have to qualify at a specific standard. So if you come with a really bad property, the Ocean Point DAO probably won't accept it. But if you give us a good asset, and the community says, yes, that's great. It fulfills the risk factors, basically. It comes into our standard protocol because we also have a risk analysis tool for tokenized real estate assets. Then it will be accepted by the DAO, and then that instant liquidity can be given. And that is something that really, I think, would create a big change in real estate.
Yeah, I'd have to agree with you there. It's very interesting to kind of conceptualize once this is more mainstream and adopted, just how this will fundamentally change some of our economic systems. Property, again, is just so fundamental to economic systems. So trying to think through what some of those repercussions could be, and then obviously linking it back into even the insurance market. There's a lot of sophistication that can kind of go in there that's very, very interesting.
I just wanted to add one thing. So you can already on Ocean Point and also other marketplaces, you can already purchase now tokenized real estate, and it takes you literally a couple of minutes and your own shares in a property in anywhere in the world, wherever the offerings are. It's literally already very easy and very simple to do. But that point token, that's going to be, I think, the key to the lending protocols and the DeFi market, really to access that DeFi liquidity. It's going to be much more straightforward, and it's going to be backed by a portfolio space.
Fantastic. Yeah, it's the simplicity, I think, that is key to mass adoption. Karthick, can I please get you to bring us back to Australia and talk to where you think some of the greatest impact might be? I know we've covered the property market fairly well now, so take us away. Thank you.
Yeah, so I think in the immediate term, there's going to be a lot of interest in the wholesale markets with Project Acacia driving some of the use cases, and also because I think the largest asset classes would probably be the ones that people would target. But in the long run, I think we would see the greatest impact, if you have to realize, in Australia, it probably is with the small businesses, small and medium businesses. I think in terms of composition, I think 97% of all businesses in Australia are small and medium businesses. And if you come to think of it, they actually have, these are all published facts, that small businesses actually have a larger percentage of their assets as just cash as against, that's because of difficult lending terms to small businesses. And usually you have to put your house as security to be able to get loans. So people don't do that, and they try to save up. And interestingly also, right, small businesses actually outspend large enterprises on innovation and R&D. It's a published fact that it's about 25% more, right, on R&D and innovation, and we know that that's what is going to drive the economy forward. So I think innovation funding is a space that where DeFi would probably DeFi and blockchain-based financial services, on-chain financial services would probably drive the greatest impact, because once we unlock that, and we're already seeing a lot of interest if you follow the real world asset tokenization trends. Private credit is a very big space, right? And fund tokenization could be another space. Private placements, which are currently informal sort of markets. We could just get a hold of that on chain. So I think we are going to see probably a lot of adoption, a lot of benefit come out of tokenization, especially in the small business world. I think that's where the real impact is going to be.
I love all the statistics that you bring to the conversation. It's fantastic, because it really, I think, puts into perspective just how many companies and kind of aspects can actually be impacted by this technology, and how quickly it's coming as well. So very interesting. Thank you. Michael, I'm going to jump over to you again. And this was a question inspired by you, but I don't know your answer. Could you please tell me, what do you think will not be tokenized in the future? And please, other panelists, think ahead, because I'm going to ask you the same question.
Yeah, thanks, Rachel. So I think, we've got specifics about what items won't be tokenized. I think the way I like to think about it is what makes sense to be tokenized, and what does it need to be tokenized. So I think to Karthick bringing stats, which I really love as well, I think we are past a point of trust is just organically imbued in positions of authority. So, I think I love the saying of don't trust, verify. So for me, I think a lot of what will be verified is anything where valuable assets can be brought on chain, assets that have value to users on chain through access and utility, where the information required in order for them to be trusted can be brought on chain as well. So what does oracles look like? What does all the data those oracles need to be able to bring on chain look like, and how trustless can that data be? So I think anything that doesn't fit into that criteria will not be tokenized, because I think it's where we'll see problems in terms of actually delivering all the characteristics required to be valuable on chain. So it's not a specific item. I could go into sort of like madness items that are very obvious, but for me, it's all of those things that can't easily be brought on chain, be verifiable on chain, and be done in a way that's incredibly efficient, that's complementary to the technology itself.
I think that was a very clever answer, because you put nothing into the ether that can't be there in perpetuity to be proven wrong on. So well done. That was very clever. And I think we neatly segued AI and with oracles in there. So well done, because I think that has been well covered today. So very well done. And Karthick, same answer, same question to you, I should say.
So the first thing that came to my mind was like, please don't tokenize my happiness. And I think, some of those, can't be tokenized. But obviously, like, you don't want to tokenize something that is not proven, like that doesn't have a basis to stand on. And it happened with, I think, some of the carbon credits, not everything, but some carbon credit projects didn't actually have actual evidence that they were, saving the planet. So, I mean, tokenizing something like that, it's probably not advisable. So you should have a basis. Otherwise, the tokenization projects could actually be seen as a failure. Like that's what I think. Yeah.
I think this is a good example to. Oh, sorry, Rachael. I think that's actually a really good example of what I was saying. Like some carbon credit projects, it can be quite difficult. They can be quite opaque. It can be quite hard to decipher the information. It can be very hard to individually verify from an easily consumable piece of data. And so it's a really good example where that can be a really hard thing to digitize. So that was good, Karthick. I'm going to keep that one for that question next time.
It's a good answer when people are stealing it. But it did make me laugh, that quip about the happiness, because I love sci-fi, and a lot of the books that I'm kind of reading now, if I look at it through that framework, I've read books where it's about like you basically tokenizing sleep or anything like that. So yeah, I don't know, I might get some nightmares about that quip. That was quite funny. And Julia, lucky last, but the same question, please. What would you believe will not be tokenized?
I think that's a very hard question to answer. I think the question should be what shouldn't be tokenized. And I completely agree with Karthick and Michael on that one. We see it already right now with there's cowboys in the space. There is offerings, and that already goes through all real world asset categories you can look at. And most of the time you don't even know if these guys even own the assets, especially those who are just selling company shares or something like that. It's very, very hard. It's not direct the tokenization of assets. It's literally the tokenization of company shares. And that alone, how the money is distributed between them, that's a completely different story. What's happening in the back end with the property they own today? Are they really going to be there at the end of the year? There's no instant reporting happening either. I think the reporting and the transparency has to become much, much better of asset token providers in any category, especially in those categories who actually offer all these packages in the back, and they're not instant, basically. I think we're going to see lots of marketplaces and lots of offerings launching in the next years. And I hope that we're not going to hit ICO times, because at the moment, there is no standard for security in the RWA space at all. We try to, like Blocksquare and other companies as well, try to establish these standards at the moment, but they are not widely adopted yet. And at the end of the day, it's the same like NFTs and all of that, that you really need to do your due diligence about who is offering it and what is the legal backing for what you're buying. Is this even on the blockchain, or is it just a company that pretends to be? There's a lot of them out there as well in the network marketing space and all of that. People are being sold with keywords, and we have to be very aware and very careful. That is just something I'm putting out there. So in the end of the day, everything can be tokenized. It's a matter of us deciding what we see value in times of meme coins. It's, everything is possible.
Yes, I had a thought when I asked that question. I was like, I should have asked people to put a time horizon on it, because I think that, over the medium to long-term time horizon, maybe it just is inevitable. So I'm glad that all of us here in the room, in the virtual room, are looking towards the future and kind of understanding how we're going to be impacted on this, because I think this talk today really emphasized and highlighted just how it's going to change fundamentally pretty much everything, because it's going to change our economic systems, and everything flows through from an economic system, in my personal opinion. But thank you so much to my wonderful panelists. I had such an amazing time talking to you all, extremely learned and impressive people. So thank you. And I think it's back to Amy Rose. And thanks obviously to Dika for putting us on today.